starting. All attendees are in listen-only mode.
Hello, I'm Ernie Humphrey, the Chief Operating Officer for TreasuryJobs.com. I'd like to thank everyone for taking the time to join us today for our webinar today, Electronic Payments. Check the facts and transform electronic payments forever. I would like to thank our sponsor, HighRadius. HighRadius empowers corporations to modernize receivables in order to lower days outstanding, minimize write-off, and reduce operating expenses. Their strong commitment to thought leadership helps us make this webinar possible today. The cost of processing incoming checks is almost 5.5 times greater than that of electronic payments. However, most companies still have a hard time expanding electronic payments adoption. The reason for this: people believe that processing decoupled electronic remittances is arduous and expensive, and electronic payments are most subject to fraud. However, these reasons don't offer the whole truth. We'll discover why today. Today you'll discover why the perceived value that companies have in issuing checks as compared to leveraging electronic payments is built on this. We will debunk the misinformation that proliferates in today's AR world and help organizations understand why checks are much more costly to process than electronic payments, why checks are fraught with fraud risk, and why effective cash application is possible for suppliers who process payments via ACH or FedWire. Before I delve into the content, I'd like to offer a few quick words about TreasuryJobs.com, cover a few housekeeping items, review our learning objectives, and then I'm going to welcome our featured speaker, Elaine Nowak, to the webinar. A few words about TreasuryJobs.com. Our mission is to connect Treasury talent with the right opportunities, and we endeavor to be a trusted career resource for Treasury professionals. We already serve some of the largest companies in the world, over 300 of the Fortune 1000. We only post Treasury jobs. We currently offer Treasury certification resources, complimentary webinars that offer CTP credit like this one. We have a career blog, and stay tuned for much more. Now let's go to the exciting housekeeping items. The slides are currently available under the handouts area in the GoToWebinar control panel. You'll receive an email with links to the presentation and the recording over the next 24 hours. For those of you interested in CTP credits, you'll have to answer all polling questions and remain on for the duration of the webinar. If you have any questions regarding CTP credit, please send an email to Ernie@TreasuryJobs.com. We'd like to hear from you today, so we can take your questions in the questions area at any time in the questions area of your GoToWebinar control panel. We'll try to get to your questions at the Q&A session at the tail end of the webinar. If we don't get to your questions, we'll follow up with you directly after the webinar. Finally, we appreciate your consideration in taking a short survey at the end of the webinar, as we always strive to improve the ROI we offer our event attendees for their valuable time. The learning objectives represent our value proposition to you in sharing your valuable times with us today. So, after the webinar today, we'd like you to be able to understand exactly why electronics are much more expensive than checks to process, to be able to develop and communicate a business case for electronic payments, to understand how to leverage electronic payments to improve working capital management, and to educate suppliers why electronic payments are beneficial to them. Now it is my distinct pleasure to welcome our featured speaker to the webinar, Elaine Nowak. In her current role, Elaine works to market products to prospects and customers, strategizing on offerings, key messaging, and product positioning to the marketplace. She is dedicated to educating industry practitioners about business challenges and the benefits and value-added solutions available by adopting the latest in technological advances. Elaine, welcome to the webinar. The floor is yours. Please take it away.
Thank you so much, Ernie, and welcome everybody today. I'll be covering the trends in non-cash payments and the comparative costs, and then I'm going to spend the bulk of the webinar checking the supposed facts around electronic payments. And then lastly, I will summarize my conclusions and we'll bring it all together and we'll see. So let's first look, what are the trends that are happening in the electronic payment space? So here we're looking at some data. This was from a survey that was done by Paystream Advisors. And here the blue represents the percentage in volume decreases, and the green shows the increases. Gray equals, it stayed the same. So if you look at the survey data, there's a significant decrease in the volume of paper check payments. And at the same time, we can see that there is a significant increase in ACH and that there's a little bit of an increase in wire transfers. So as we talk about the overall decisions that are being made to try to increase e-payments and decrease check payments. I'm looking at another survey data, and it shows this trend as well. Organizations were asked in this particular survey, they said, are you actively looking to increase or decrease certain types of payment options? So if we see the results, it was found more than half the companies were trying to increase their ACH payments, that 52% right there in the green. And we also see that companies were also increasing 45% the payments for cards, right? But we also see that almost 2/3 of the companies were trying to actively decrease the check payments that they were receiving. So what is all this data pointing to? It is the rise of e-payments. But we also found that organizations are struggling with electronic payments. And in this survey, they identified what organizations named as the barriers to actually increasing their use of electronic payments. And if we look at the top 6 or so, we can see that the shortage of IT was the #1 major barrier, that lack of integration between systems was the second major barrier, that no standard format for remittance was also a barrier, that it was hard to convince customers to pay electronically. Additionally, that collecting and storing bank information was also a barrier, and that it was difficult to convince suppliers to accept electronic payments. And then there's always this issue of security and privacy for bank account information. So today, I'm going to actually extract these 6 barriers, and we're going to actually debunk and look at what the supposed facts around them and see if all of these, in fact, are barriers or are there workarounds? Are there something that organizations can do to address these barriers? Now, I wouldn't have a good webinar without having a poll question or two, so here's our first one that we're going to put out there today. Are electronic payments increasing at your company?
All right.
So you have the opportunity. Yeah, go ahead, Ernie.
Thank you very much, Elaine. I'm going ahead and launch our first polling question. Just a few logistical reminders. We appreciate everyone's consideration in answering all the polling questions today. Those of you who are interested in CTP credits, you'll have to answer all of the polling questions today. So again, it's interesting to have these polling questions so we can level set the content and deliver that content on a more pointed basis to you going forward. So I'm going to go ahead and I'm going to leave the polling question up for another 30 seconds or so. And then we're going to go ahead and take a look at the polling question results. So I'm going to go ahead and close that polling question. All right, now I'm going to go ahead and take a look at the results and get a few comments. Elaine, what are your initial thoughts here? We have 87% yes. What was that? About what you expected?
That yes, I do think that's pretty significant, and I do think that that's what we're seeing is that the electronic payments are definitely on the rise, and there are issues and there are challenges. So how do you handle those? I did have some quick question. I saw a question up there, Ernie, what ACH stood for, and that's Automated Clearinghouse. So those are a type of electronic payment just for that person who asked that question.
Okay, great.
Okay, so let's take a look. Let's do a little comparative right now. We're going to take a look at checks versus electronic payments and why a lot of companies are moving towards electronic payments. 87% of our audience see the increase, right? So here, what are the reasons why companies are moving? So in the transition to get to electric, a lot of companies are expecting improvement in working capital, and that they think that e-payments are going to provide this improvement. So the amount of cash that a company could save, it's significant when you compare, as in this diagram, checks versus something like an ACH payment. So here we can see that the average cost of processing a check is $1.50. And organizations, let's say in this case, I'm going to say an organization receives about 20,000 payments a month. So they're likely to incur an average daily cost of about $1,000 to process check payments. And if I extrapolate that out to a monthly cost, I'm looking at about $30,000. And if I then extrapolate that out to about a year's worth of cost, we're looking at $360,000 to process check payments. Now, when I compare that with electronic payments such as an ACH payment, the median cost of this type of electronic payment is about 29 cents. So if I take that same data, an organization receiving about 20,000 electronic payments a month, they get an average daily cost of about $193. That monthly cost is about $5,800. And then again, extrapolating that out to a year, we're looking at about $70,000. And I would say that the difference between $360,000 and $70,000 is pretty significant in terms of savings moving to electronic payments. So why is check processing so expensive? What happens is that in check processing, all that data is being keyed by the bank. And you pay by the keystroke. So if you need to extract information, if all this information that we see here, all this data, the payee name, check number, all this information is available on that check, and the bank has to keystroke by keystroke capture this information, we're looking at an average of about 20 keystrokes per check. And this is where it starts adding up to that median cost of about $1.50 per check to process. And if we add on your internal processing costs for processing that check, things like the scanning and the stapling and photocopying, all these, we're going to see additional charges, not to mention your operational costs for processing all of this information. So having looked at the background, we can see why check payments are going by the wayside and why electronic payments are increasing. So let's look at the first fact that we've heard is that electronic payments are subject to fraud. So let's explore the facts around the use of the electronic payments and see if they are more susceptible to fraud than check. So according to this study, this was a 2015 AFP fraud and control survey. So this was done a few years ago. It was talking about 2014 data. And at that time, about 62% of companies were targets of payment fraud. Now, paper checks led the way in terms of payment types and which ones were most susceptible to fraudulent attacks. So even as the overall use of checks declined, the percentage of fraud was still, it was 3 times what it was for ACH payments, and it was actually twice as much than what card payments were. So the credit and debit cards, they actually declined their fraudulent activity. They went down, according to this survey, from 43% to 34%. So they were actually less fraudulent if you used card payments. Now, the survey was done again a year later, and the same study was done. And it's worth noting here that wire payments actually saw a significant increase in fraudulent activity. So this particular type of electronic payment started seeing an increase. But still, overall, the fraud for checks is the most by far. So wire fraud, what this AFP study sort of analyzed and said, they think that the reason of this increase in the wire payment fraud was because of the speed of that type of transaction and the fact that it's very hard to retract that transaction once it goes because it is such a high-speed transaction. And another reason that the AFP suggested there was an increase in something called the business email compromise, these types of scams that are taking place. And they might actually be responsible for an increase in overall fraudulent activity that's been happening in the payment industry. So these type of business email scams, what they do is they target email systems in an effort to trick employees into making payments to fraudulent accounts. Now, if the AFP just came out with, here's the latest data, this was just published a few weeks ago, and in this study, up from that first set of data I showed you, 74% of organizations were victims of payment fraud in 2016. So this is an increase from 2015. And even as this chart shows the slight decrease in fraud for the wire transfers, it's still being reported at this elevated level, right? And this is still leading to the belief that these business email scams are still happening and they are still prevalent. And the slight increase there that we're seeing in the ACH debit fraud, again, it might be an indication of maybe criminals are finding a new way to take advantage of electronic payments. But the upshot of all this data that I'm putting forth to you today is that checks continue to be the payment method that is most exposed to fraud activity. And if I were to go by this data, it looks like that the fraud activity around check payments is actually on the rise for the first time since 2012. So going back to the fact, are electronic payments subject to fraud? I would say yes, it's true. Both ACH and card payments, but especially wire transfers might be subject to fraud, but it is still significantly less fraudulent activity than with paper checks. Checks are still seeing many more attempts at the fraudulent activities, and fraud for checks is actually on the rise again. So my second supposed fact I'm going to take a look at is the fact that customers are unwilling. They are wary of sending and accepting electronic payments. So back to the data. So what we've seen in these surveys, this results of another AFP electronic survey, is that customers actually prefer electronic payments because there are so many issues with the high processing costs, some of that information that I gave to you earlier in the webinar about check payments. So checks have the highest cost to process. And what they've also seen is that there's discounts that are missing and that there's payments that are duplicated with check processing. And these issues are all better managed when a customer pays via electronic methods. I've also seen a CRF survey in which there were some observations by those survey participants, and they said things like, when you work with checks, banks tend to lose a lot of the paperwork, which obviously can cause issues. And that there were a lot of different banks at these different locations, so that the data across all these multiple banks had to also be processed for these checks. And also that a lot of lockbox files had errors and they had mistakes. And this payment and remittance data, if you think about it, it's all being manually keyed. People make mistakes. And so those bank files had mistakes. So again, I like to look at data from many different sources, and this data actually talks about a perception study, and that this one said that customers prefer electronic payments because of the challenges, again, associated with checks. And in this case, they wanted to get their invoices electronically. So 1/3 of these customers asked for invoices via an online portal, and about 1/4 of them asked for the invoice electronically through a third-party provider. So again, we're seeing that customers are migrating towards electronic payments. And then here, again, going back to a question, this survey talks about, well, how likely are you as an organization to convert the majority of your B2B payments for your major suppliers from checks to electronic? And this is okay, in the next 3 years, what does this look like? And almost half of the organization said, yep, we're planning, we're going to be moving to electronic payments. So when we did our poll question earlier, and almost 90% of you said yes, I can see that that's also reflected in other data that we've seen. So we talk about why customers might want to leave checks behind. And I want to also look at this data, why organizations say that they want to implement electronic payments. And they want to adopt these payments because they want to prevent fraud, because as we saw earlier, checks are the most fraudulent. They want to reduce costs because processing electronic payments is supposed to be less expensive. And that will result in an overall increase in efficiency for the department. So increasing efficiency is the top initiative for the adoption of electronic payments. So lastly on this subject, I just want to touch on some information that was provided by the Business Payment Coalition. They did a survey, and it said, well, what is holding back? Why are customers not willing to change over? And you may get that mentality. There are always going to be customers who say, well, we've always done it this way. So they're very comfortable with paying with a paper invoice and a paper check. And there's also this conception, oh, there's no upfront cost. I don't have to pay anything to submit a paper invoice. But the reality is that the newer technology that's now available is going to really help save time and money in the long run. So even if it might initially disrupt that comfort level that customer might talk about, ultimately it's going to be better for everyone all around. And that customers should also think about, if they're relying on paper invoices and paper checks, they're still paying for paper and toner and printing and storage, and they can save on all those costs if they move to electronic payments. So this survey that was done by the Business Coalition said the main barriers that limit the use is this lack of education about the benefits. So really, we need to get out there and educate about what are the benefits for electronic payments. Make sure your customers know that. Also, that there aren't as many small-scale solutions that make e-payments adoption easy. And that another barrier was that there is a lack of effective technology and IT support. So if companies are actually looking for effective technology, there are scalable solutions available, and again, education is important. And that a lack of IT support is less of an issue when a solution is cloud-based or delivered as a service over the internet. So electronic payments are coming along. We are seeing an increase, but there are still challenges with which organizations have to deal with. And things like that lack of standard remittances and there's no standard business practices are definitely challenges that are out there. But I will add to that there is automation technology that will help address those challenges and make the processing of the electronic payments that much easier. So going back to my myth, are customers wary of electronic payments? So the truth is that customers are not really unwilling so much as they are increasingly gravitating towards electronic payments. There is technology out there to address the barriers to electronic adoption, and that more and more customers are looking to go digital and to solve some of these age-old cash processing challenges that we see. So at this time, I'm going to put another poll question out there. I'd like to kind of get a pulse of our audience and see what is the biggest barrier for straight-through processing at your company.
Great. Thank you very much, Elaine. Just a couple reminders. We can still take your questions in the questions box, and you go to Webinar Control Panel. Elaine has some fantastic knowledge, so we want to make sure that you take full advantage of the opportunity to ask her your questions. And again, we appreciate everyone's consideration in answering all of our polling questions here today. So I'll go ahead and leave the polling question up for another 10 seconds or so, and then we'll get back to Elaine's compelling content, and she will get on to fact number 3, which is supposed fact, which is that there's a lack of standard remittance formats. So I'm going to go ahead and close that webinar or polling question and go ahead and share the results. And Elaine, what is your initial take here?
So on the polling results, go ahead, read them to me, Ernie, so I can I don't have it up on my.
Sure. So they have, the largest barrier, we have multiple remittance formats is 49%, and then we've got no remittance received is 21%, and multiple ERPs 18%, and partial or truncated data is 13%. So it looks like remittance issues are 70% make up that largest barrier.
Well, isn't that perfect? Because my whole next section is all about this lack of standard remittance formats and how it leads to an increased manual data collection process for the AR team. So let's go ahead and see what this fact has for us today. I'm going back to traditional check processing and what happened in the past when checks were routed through the bank lockbox. That made it easier insofar as the check payment and remittance information, it was manually keyed by the bank, but at least it came in together. It came in through your lockbox service. Both the remittance and that payment information came into the lockbox file, and if you were lucky, it could be quickly and easily consumed by your ERP. Sometimes you had to manipulate that data, or that file had to be changed up. But yes, let's just say that this is the process that was happening. What we're seeing now when it comes to electronic payments and the issues that are starting to pop up is that payments are being sent electronically from the bank still, but now we're seeing a separation of that remittance information from that payment information. So the bank is sending that payment, but that remittance information, it is coming in from all over. It is coming in from various sources, and it's coming in various formats, and sometimes to the point of that poll answer, the attendees who answered the poll, sometimes it's not there at all. Sometimes it's the wrong information that's coming in with that remittance data. And regardless of how it's coming in and in what format, now what's happening is AR teams and the cash application teams are actually having to manually capture that remittance information, and they're actually having to pull that information from whatever those sources are and read it. That's taken a lot of time. What we're also seeing is that when that remittance information is specifically coming in, or it's actually being put up on web portals, and customers saying, okay, just go to my web portal, you're going to be able to get my electronic remittance information if you log in. Well, that'd be well and good if all of your customers use the same portal, but they don't necessarily do that. So there might be a wide variety of web portal logins that your team has to navigate, all these sites that they have to go to in order to collect remittance information and capture that data so that they are able to bring it all into their ERP system and figure out what payments these all belong to. Then, if we go back to this fact, right, that the lack of standard remittance information is causing so many issues with electronic payments, and there is an increase in manual effort, it's true. But what we're seeing is that organizations could use something such as automation technology, and this technology would take away this additional manual effort that's being put towards the collection and the reading of this remittance data. Because technology is able to extract the data, it's able to link the information to the appropriate payment files in the system, and it's able to eliminate the issues around this lack of standardization that seems to be a major problem. So what are these types of technology that help automate the capture of remittance information regardless of format, regardless of source? I'm going to talk about three main technologies that are out there today. OCR, which is probably the most mature, it is one that's most recognized by many organizations. But I'm also going to talk a little bit about what's software parsing and what kind of automation technology that is. And then lastly, I'm going to talk about the most cutting edge artificial intelligence-based technology and what that looks like. So first, OCR. How does OCR, or what's referred to as optical character recognition, how does this work? So instead of having your AR teams manually read that remittance information, the OCR is able to convert the text that's on the paper or in an image into an electronic text file, and then that can be processed by your system. With OCR, what happens first is that as a user, you have to create these reading rectangles. And then once you have the reading rectangles and they're set by the user, then that image is captured. The OCR is able to recognize the individual text elements, and it breaks it down into these distinct characters. And then these characters are actually matched to entries in a library, and the output that is produced is then captured. So whatever those variables are then captured in the system. So what they found, though, was that scanning all this OCR data over and over again, the remittance information was coming in, and what users figured out was that, well, if I create a template, if I know that my customer sends the remittance in the same format every week, they do send me an email every week, and in the body of the email, they put the invoice information and they put the payment information. Now I'm going to design a quote template for my OCR to be able to just look at this email that comes in every week and recognize the fact that within these particular boundaries that I have created for my template, I'm going to find the information I need for this remittance. I'm going to find my invoice numbers, I'm going to find the amounts that were being paid so that I can reconcile them. Now the drawback of creating these templates is that they're all well and good, but they have to be maintained. And if there's any kind of change in format. If, for example, your customer now provides one line of a discount information that disrupts the way that these reading rectangles are capturing the data, then all of a sudden you're going to have reading errors. So what you also have is that OCR, in order for it to read, it has to convert any kind of files to an image. So it can't just go in and read the data in an email. It has to take that email and make it into an image capture. And so that what's happening is that sometimes the AR department now has to print out those emails or take that information and scan it in so it can be saved as an image that is readable by OCR. So you can see why there are disadvantages. So another alternative to OCR is this next level of automation, what's called software parsing templates. And these, again, are reading templates, and they're created using software code. And this code is developed and tested so that it can read digital text. So there's no conversion to an image, and that's just not necessary. It's able to read the digital text, the text as it comes in. So the parser is able to take the documentation on these set templates, and the setup of software processing actually takes a lot more work up front because that code has to be written and built, but the accuracy is better overall than OCR, and the integrity of the digital file is maintained because there's no conversion to an image. Okay, the software parser is able to read that data as it comes in its digital format. So the fidelity of your digital information remains higher, so that's why you get that increased accuracy. But again, like OCR, the drawback is that if your remittance format changes for the software parsing engine, then it actually needs to be changed and updated as well. So the managing of the templates becomes an issue. So that's where I want to talk about taking technology to the next level, to the next generation, and that's the introduction of artificial intelligence coupled with robotic process automation. So OCR and software parsing are examples of template-based robotic processing. Now, they are parsing information automatically, but again, there are these manual steps that have to be put into the process to make it work successfully. But what is available out there are additional robotic processing automation tools that don't require anything like these reading and capture rectangles. These particular type of robotic parsers read the files, and when you introduce artificial intelligence, it actually enhances the process even further because that artificial intelligence is able to understand how that data is being transformed, and that companies who use artificial intelligence-based robotic processing are able to achieve upwards of 90% automation for processing remittance and payment files. So that's pretty significant. So here are some examples of these other various robotic engines and what they are able to extract in terms of remittance data. So these RPA tools, as I'm going to call them, they process the data in its native file format. So when I say native, it means I don't have to change it to an image. I don't have to create these templates. The email parsing engine extracts the data from the body of an email, or even from the email attachment. It doesn't matter. It doesn't matter whether it's a PDF or a Word file or whatever file it is. That email processing engine is able to extract that remittance information. The web aggregation engine, so that's the robotic process that's able to go out and to put out web robots that crawl on the web and actually log into all these different customer portals, and they're able to extract that data from these third-party websites and the customer portals and browse to the correct area on the page and take that information. And in the same way, EDI files are able to extract using the EDI engine. So all of these tools that we have here are orchestrated by the artificial intelligence, and they become a one-stop shop for collecting all of this data as it relates to electronic remittance. So how does that, here is an example, right? Let's say that electronic remittance has come in, whether it was in this case, let's say it was an email that was sent and it was in the body of the email. So what that email processing engine is able to do is it's able to read that information without capture rectangles. It's able to see and extract that information and populate it in the system, which is that area that's down below. And again, it's able to extract the paid amounts and to create the two line items that are provided with that remittance data. And then if I go back to that challenge earlier where we talked about all these different portals and how your team has to log in to however many portals as your customers have provided logins for, now this technology, the web aggregation or web capture engine, it's able to eliminate this problem because that RPA-based web capture automatically logs in to all the different customer portals and extracts that needed information in regards to the remittance. So if I just give you the big picture so you can kind of see what does this look like in terms of the process itself. You'll see that the information is coming in on the right, however that remittance information is coming in, whether it's EDI or email or it's on a portal somewhere, and that customer payment information is now going through your bank, and that payment information comes into your system. So something like a cloud application would sit in between your company and all of this data that's coming in. And these remittance capture tools, which are highlighted on the right, the web aggregation and the OCR, the email parsing, the EDI, all of that is able to be collected using this artificial intelligence. So when we look back at that lack of standard remittance, it increases a lot of manual data. So it's true, it does. The electronic remittance, because it's decoupled, causes a lot of issues. But all of that can be remedied if smart companies go out and look for artificial intelligence or robotic processing automation that's going to help collect all this electronic remittance and handle that remittance data, regardless of what format it's in and with very minimal manual intervention. So let's take a look now at the next fact. So once you actually start receiving your electronic payments and you only get your payment files from the bank, and now you're getting all your remittance coming in separately. So even if you were to employ this artificial intelligence to collect and capture that information, how do you link all of that remittance information that's being captured with this payment information that is coming in? And what's happening is that now this is a very manual process for a lot of teams, and there is manual effort, but again, we can look to technology to help alleviate this issue. So with electronic payments and this separation of remittance and payment information, it's delinked. It's if that's even a word, delinked. But it's no longer together, right? So you do have to have all that information collected for remittance. But once it is collected, it doesn't have to be a manual process to have a system in place that can help you link that remittance information with that payment information that's coming in the bank. So again, you have to employ something that's going to have an intelligent linking engine. And this engine has to be able to read the data from your OpenAR and read your customer master data files, and then it also is able to read that information in the payment files that are coming in from the bank. And then it has to use some kind of linking engine that takes all that remittance information that's all been collected, and it uses contextual data from things like the sender domain and the email subject, or it might even be the MICR number, in addition to the things like an invoice number or the name on that master file. And then it's able to accurately connect the appropriate remittance and the payment file and do this automatically, so this combined file can then be posted to your ERP system and close out those open invoices. So the supposed fact that the inability to link remittance and payments, you don't have any lockbox remittance, additional manual efforts are required to link that payment information. If you use artificial-based intelligence and these solutions, they're able to automatically link these files. And regardless of how that the remittance is sent and the fact that those payments are coming from a separate source. So and I've got another fact, and again, this was one of the ones that came up in the poll, and in addition, at the beginning when I talked about survey data from the industry, is if the remittance and payment data is missing, or if it's incorrect, I'm not going to be able to integrate with my ERP. So there's a lack of integration with the ERP system. So let's take a look at, is this something that can be solved? So the challenge is that when you're matching and you're attempting to reconcile your payment and remittance information, that necessary information may not be readily available. So a customer, a lot of times they're going to send their own personal PO reference number instead of the actual invoice number on that remittance information, right? And other times they'll send some semblance, it's sort of close to what the invoice number is, but they actually took off the first number, or they added a -L2 at the end of that invoice number for their own purposes. And when it comes into your system, now it's not a straight match one to the other, so you get errors. You can't just post it right into your ERP because it's not recognizable. And then, of course, there's always those situations when there is no remittance at all. So how do you reconcile the payments coming in from the bank with your open invoices in your ERP system? So what you're finding is you need to look to automation that takes advantage of business rules and these algorithms that is able to extract that open AR in the system and read that available customer data. And these, again, using these business rules, it reads that whatever information is provided. So if it's a PO number or some other information that's supplied, it's run through a whole series of these business rules that looks to say, okay, it's going to extract the specifics that are available and the file format that's there and match it to the customer master in the system. Any kind of missing or truncated information is then added, and that information is transformed and it's normalized in the system so that it is able to go into the ERP, extract the appropriate invoice, and be able to automatically close it out. So here's an example of how it would just take that information. You see there's a Receive Data tab, and that information, the reference field, this is if it's a straight match. It's able to take that information, and then we see under the transform data, it says here's the information coming from the ERP system. It directly matches with the information that's being received from that remittance, and it's populating it correctly in the system. In the case, here's an example when it's only a partial, or there's missing data, or even if there's no remittance at all. What happens is the system then takes whatever received data, what is the data that is available? It extracts that information. And then again, it also extracts the information from the ERP, and we see down below in the example where this particular client left off that first 7. And so their reference fields are different from what the invoice is, but the system and these intelligent linking and the ability to use these business rules actually goes through a series and determines that, yes, this reference number is actually referring to this ERP invoice in our system. And it looks at things like the payment amount and all this other criteria, and it's able to make that match. Now, this might get a little, if I haven't gotten too technical already, this is just, again, talking about straight-up integration between systems, and we also see that lack of integration may not just mean missing information, it might also mean systems that aren't able to talk to each other. So just to quickly talk on this particular topic, the best way to post to an ERP system is some kind of solution that has a cash application cloud. A cloud-based solution enriches the information that comes from a bank file, for example. It enriches that remittance information that we talked about, all that information. It doesn't just capture the invoice number and the amount. It captures all this other information, creating this enriched file. And this enriched file then provides way more touch points for matching what your open ERP looks like. And that's why you're able to achieve upwards of 80 and 90% straight through cash processing. So here, this simple technique, it communicates with the ERP, and it's sent in such a way that it's a simple format that goes through the cloud, that takes that payment file, it works with this cloud base, it consumes it in a hassle-free way, and is able to use the OpenAR for the processing purposes. So connecting to older systems without this simplified interchange, it just creates integration issues. And then you do have major integration issues with ERP systems and third-party agents and so forth. And that, as we all know, results in a lot of time delays, and it affects project timelines. So what you want to look for are solutions that are taking advantage of what we call an enriched payment file. It works the best because this can get you that straight-through processing that all organizations are really looking to have. So the ERP then takes this electronic file that's in the cloud, and it's either an EDI or it might be a BAI2 file. It doesn't really matter that format as long as it's the simplified format. And this method makes it a much more secure and simple way of sharing the file information, and it doesn't require major integration to write interfaces and connectors and codes and so forth. So when I go back to the overall big picture of how does the AR matching work in conjunction with with your whole cash application end to end, we can see again your customers, that payment information, the remittance, all that information coming in on the right. And in this case, the data has been captured using those engines, and now that data goes through this transformation and this matching process using invoice business rules, and there's also the ability to extract the deduction information. But that's for another webinar at some future time, or maybe on demand. So going back to the fact that no ERP integration with our systems, or there's a lack of integration, we're going to bust this fact and say, actually, if you use an artificial intelligence-based system, you can take that linked payment and remittance file, and you can reconcile invoices in your ERP system, even if the data is only partial invoice numbers, or it's truncated information, or it's missing altogether. The system is able to add a prefix or a suffix and append that information to transform it, and then it's able to apply it to the master customer data, regardless of the fact that you might have an incomplete data set. So and then if you use a cloud-based technology, then you're going to simplify that data transfer between the systems, and this helps you to avoid major integration issues. So my next fact, and this will wrap it up in terms of the 6 facts I was going to hit on today and talk a little bit about, and it's that there's a huge overhead for our IT department in order to process electronic payments. So it's going to demand time and effort and energy of IT, and my IT department has no time. So the reason I can't get electronic payments processed is because of the fact that I just don't have enough IT support. So let's take a look at what are the available ways in which you can employ electronic payments. Well, either you can do an on-site, on-premise solution, but that would require system maintenance, and that's an IT. It would require additional hardware, and that would require IT. You'd have to upgrade software and make sure that all the information, the software that you have, is compatible with whatever automation solution you're putting in place on site. So again, yes, in that case, you would have more IT time. Then we can also jump down to the third row and say, okay, well, actually IT, they're going to want to do it in-house. They're going to do their own homegrown internal IT project. Well, of course, that is going to take way more IT time. That's sort of apparent. There is going to be the system maintenance will all fall on your IT team. There's going to be additional hardware that they'll have to purchase in order to store all this data and information in regards to electronic files. And they'll have to take care of that internal software. So your IT department will, for sure, have to have a lot of overhead. But if we look at that middle solution, a cloud-based technology, in this case it's SaaS, which is software as a service, so you pay for licensing fees on a maybe monthly or annual basis. And things like system maintenance are then now, the onus is shifted not from your IT team, but now it's on the vendor. And it's included in the service level agreements that you have with your vendor, how often that system is maintained, how often that software is upgraded. And because it's in the cloud, there is no additional hardware that needs to be purchased. So your IT doesn't have to worry about going out and finding the additional storage capacity in order to put that electronic information in place. And then every kind of software upgrade, it's in the cloud again, so the upgrades are seamless for the departments, and the IT doesn't have to worry about those upgrades because that, again, that onus is going to be all on the vendor, on whoever is going to be providing you the services. So overall, if you look for the types of solutions, you can avoid having a lot of IT overhead if you choose a solution that is cloud-based or a software as a service-based solution, and you avoid things like an on-premise or maybe an internal IT homegrown system. So you can deflect a lot of the costs for your IT department when you choose a solution that is over the cloud. So I've talked now about these 6 supposed truths, and I've given you a lot of information in regards to what is out there and available to help you to get over these barriers and be able to do a better job at adopting electronic payments. So I just want to share a few clients in North America who actually achieved some great results when they adopted electronic payments and they employed advanced technology. So Starbucks was able to achieve 97% automation of both their electronic files and their check processing. Dan in North America, by employing a system, was able to reduce their full-time equivalents. So they went from 4 people having to manage all of this cash application and the posting and the remittance down to just 1 person had to do it. And they were able to take those 3 other resources and allocate them to much higher value tasks. So then they became even more optimized. It was great. EmployBridge is a staffing services agency, and by using an automation technology, they were able to reduce their bank lockbox costs by $100,000 a year. And Coty, which actually is a supplier of high-end beauty products and perfumes and such, they were actually able to automate the coding of their deductions. 95% of the deduction coding was done automatically using an advanced technology system. So let's bring it all together and just go back to my 6 truths. So what did we learn today? So in looking at the supposed facts that I presented to you, for the most part, the evolution of electronic payments and the availability of cutting-edge technology it can bust just about every single one of the facts that were presented. So the reality for number 1 is that the risk of fraud is actually less with electronic payments than with checks. We've also learned for number 2 is that customers actually prefer electronic payments and electronic invoices. So there is definitely an increase in electronic payments, and we're going to see that it's going to continuously increase. What we've also seen is that customers, that technology can be used to automatically collect remittance data, and again, it doesn't matter what format it's in, and it doesn't matter what source it's coming in from. Advanced technology is able to capture and collect that remittance information. And additionally, for number 4, we can have technology out there that automates the linking using rules-based engines that's able to match the payment and remittance information to that open ERP, even if the data files are truncated or incomplete or contain extra information. And even in the case of missing remittance, the data files are easier for the ERP to consume. And then if we also employ a simplified cloud-based communication between the ERP data and the information coming in from the bank, and we have this enriched files, then we're going to be able to eliminate major integration issues as well. And then lastly, when we're looking at our IT departments and we're saying, hey, how do we minimize the overhead for IT? Look to SaaS-based solutions, because that results in minimal IT intervention to get it up and running and to get to the go-live stage. So when we move away from the barriers and we start looking at the benefits of why you would move to electronic payments, in this particular survey, cost savings, number one. Overall, it's going to save you costs, especially if you use technology to help with the entire cash application process. You're going to get increased speed of settlement, and all of those things ultimately result in improved cash forecasting. And then you'll have more efficient reconciliation, you can control fraud better, and you can ultimately have better relationships with your customers because you're able to process and you're not going after them for payments that were already received, things like that. So we're going to pull up our last poll question here. Would you be interested in learning how a robotic process automation-based system could benefit your organization?
Great. Thank you very much, Elaine. In order to be mindful of our time, we're going to go ahead and leave that polling question up for about a minute or so. But I'd also like to go ahead and hop into our Q&A so we can get to a few of these questions. And of course, we'll answer all your questions that we do not get to directly with you after the webinar. Elaine, can you give us some color around the business case for the AR automation tools? Can you give us like the 3 big pillars? It seems to me that those might be reduced cash application costs on the time side and reduced lockbox costs. Can you give us some other pillars of that business case?
Sure, and I think it goes back to that last benefit slide that I kind of touched upon, and it's the fact that, you know, when we talked about electronic payments, the industry got so excited about the fact that, hey, it's going to help, it's going to reduce the overall effort of our team and the inefficiencies that we see, and then the reality came, and all of this manual processing of things like remittance was just such a total drag. And so now what we're seeing, though, is that companies are realizing that these manual processes, that they don't have to be manual, that there is technology that's going to be able to increase the efficiency, increase the processing speed, reduce the number of errors, all of the types of things that companies are looking for, and we're hoping to get from electronic payments.
Okay, great. So a couple of questions around this. So we talked about, you know, accounts payable. So there's 2 sides of this, right? It's less costly to pay by checks, but it's also can be less costly to receive checks, right? So couldn't it be the case that if you adopt the AR remittance technology, it could also be a valuable tool to your AP department in that might help the customers increase the adoption of electronic payments as well?
Absolutely. Actually, if an organization were to apply an end-to-end solution, so an automated solution that actually starts at the credit process and then works its way all the way through invoicing, electronic invoice presentment and payment, and then through cash application and into collections and deductions, there is automation that can be achieved end-to-end. And in every one of those 5 areas, you could have automation that will help make that a much more seamless process. So even as you put this kind of automation together, then different parts of your department, your collections teams, your deduction teams, your cash application teams actually can all benefit from an end-to-end automation solution.
Okay, great. And another question, is there some sort of scale that companies see in terms of the volume of remittances that they receive, or is it more of the complexity of those remittances that they receive?
As in, like, which is more of a challenge?
No, is there a tipping point, like that you have to get so many payments in every month, or what is it that really drives the ROI to be positive to pay for the investment in this technology? What are the key drivers there?
So I think that one kind of comes down to the number of transactions. I couldn't say offhand, like, okay, it's 5,000 or it's 20,000 or it's 50,000, where it really makes the most sense. But as a gauge, if you look at how many team members do you have that are doing any particular process in your credit and AR department, and if your teams are spending a lot of time doing manual tasks, even if it's 3 people that you have in your department and there's so much manual work, there is a scalability to these types of solutions where you can just employ a piece of that technology even to help smaller teams.
Okay, great. Thank you very much. In order to be mindful of our time, we're going to have to go ahead and formally close the Q&A session. However, as I mentioned, we will follow up with you regarding the questions that you had during the webinar. So first of all, I'd like to thank Elaine for her great knowledge and content. So thank you very much, Elaine, for your great content and insights.
It was my pleasure.
I'd also like to thank, once again, our sponsor, HighRadius. We appreciate and share their commitment to thought leadership. And it's also evident in the great content and resources, which you can review by visiting the HighRadius website. And please note you'll have the opportunity to be connected with HighRadius and/or Elaine via our post-webinar survey that will launch immediately following the survey. And finally, thank you very much to the audience for your valuable time today. If you have any questions about the content we covered during the webinar or treasuryjobs.com or CPE credits, please contact me at ernie@treasuryjobs.com. Thank you very much, everyone, and make the rest of your day great.
Thank you all. It's been great working with you today. Thanks, Ernie.
Thank you.